Hey, what is up everyone? In this video, we are going to talk about my portfolio performance and what I have bought more over the week. Now, there are some questions from my previous video that I think is really worthwhile answering in this video. So if you have any questions you'd like me to answer in my next video, just let me know in the comment section below and I'll take some time to answer that in my next video. As usual, no, this video is not financial advice or recommendation to do anything. But if you do learn something new, it will mean the world to me if you could gently smash a like button. All right, let's get started. So for my Australian portfolio side of things, it's currently worth approximately 129,000 Australian dollars. And let me just move my portrait. My portfolio so far since I've started investing is compounding approximately 18% per annum compared to around 11% for ASX 200. Now, if I look at just this calendar year, I think that I'm slightly behind in terms of generating alpha. Yeah, so I am slightly behind the market when it comes to this year, but from a longer term basis, I am absolutely okay with some short-term misperformance. Now for my portfolio, for those of you who have been following me for a while, these are my foundational ETFs and listed investment companies. Argo is very much the equivalent of Vanguard VAS, which is like the top 300 Australian companies in Australia. And VTS is the US Total Market Index, and WAM Research is actually more of a managed fund where they stock pick companies that they think are potentially undervalued. For the growth side of things, I have Asia, which is part of my diversification strategy away from US and Australian stocks. I know that everyone is pretty bearish towards Asian companies at the moment, but again, like I said, this is my diversification strategy, so I'm not going to touch this for a while. CrowdStrike is a cybersecurity play that I am incredibly excited about. So I am looking for potential opportunities where I can add a little bit more. It has been up for a run recently. Micron Tech is a semiconductors play. Even though that it is down currently, I am not worried. I'm just letting it pan out. Novonix has been treating me incredibly well, and I was not expecting the number of rallies that this company have been going for. So for now, not going to touch it. This is going to be a long-term play for me, so I'm just going to let it pan out. Peloton is a bet towards the future of fitness, and I know that a lot of people don't like Peloton at all, which makes me super excited because if everyone agrees, then the opportunity is probably too late. Talga is something that I believe in the long term. Again, part of the battery supply chain play. And I know that there are some questions on Talga, and I will answer that in the Q&A section of this video. Zillow went from 1% of my portfolio to 2 to 3%. It's a high conviction play for me, and it has a great CEO, incredibly big market in real estate, and I really don't think that the real estate market is as bad as everyone make it to be in the US, especially with the millennials getting to a stage that they really will want to own a home moving forward into the future. So not to stress about Zillow. I know that some of you don't agree with me, and that's absolutely okay. If you do want me to make a dedicated video on Zillow, let me know in the comment section below. So for my stake portfolio, or my US portfolio, if you will, it's currently worth around 55,000 US dollars. So let's give or take approximately 70,000 Australian dollars. Now, over the week, I have added more into Twilio, and this is purely based on the thesis of a transition between third-party data to first-party data. Now, if you want to read more into it, just go on Google and learn more about the iOS update and how that have impacted the different app platforms like Facebook, Google, Snapchat, Pinterest. And I've also added more into Disney and also Bristol Myers. I think that Disney and Bristol Myers are becoming better and better value plays, especially Bristol Myers. It has corrected quite substantially, so it gives me a chance to get my average price down a little bit more. Now, beyond that, I'm very, very happy with the rest of my portfolio. Not too many changes. I know that Tesla have been on a massive run lately, so I'm very fortunate that is the case, but it'll be good for Tesla to get a bit of a breather, to be perfectly honest. I've loaded all my statistics from Stake into Sharesight so that we can get a better view in terms of how my performance has been for this year. And currently my portfolio, well, in Australian dollar terms, is worth around 72,000 Australian dollars. And In this calendar year, so from basically January to now, my US portfolio is up approximately 32%, with 2% in currency gains, around 0.23% in dividends, and 29% in capital gains. So a tiny bit of alpha above the S&P 500. I try not to get too carried away with my short-term performance. And when I look at the long-term performance for my US portfolio, it's, of course, it looks good, but you never know when it comes to these markets, right? Like one day you could be up, next day you could be down. So I try not to get too carried away with these metrics. Now, if I add everything together, my Australian and US portfolio is worth approximately 202,000 Australian dollars. I still think I'm very much on track to be financially independent when I am 35. That is the whole goal of, well, at least for part of my channel, to document my financial independence journey. When I look at the first purchase, my portfolio is compounding at around 30% per annum, which I think is really good. But again, I try not to get too carried away with these things, right? You could be up 30% right now, and then next thing you know, the market tanks, then you could be down 5%. Who knows when it comes to these things? I still have around 8,000 worth of cash in this account. There are plenty of things I could have done better for my portfolio that I have implemented. And this is actually a really good time for me to go into the Q&A section, because it's a good time to reflect on some of the things that I've learned, and your questions are really good. So the first question I want to answer in the Q&A section is from Hesky. Now, Hesky asks, "Hi David, how high do you think the quality of the companies that you own in your stake portfolio other than Tesla, comparing to Tesla? It seems your portfolio is very much weighted in Tesla and all other 10-15 stocks are very small positions. Why is that? Is it because you don't have enough conviction with those companies? If you do have high conviction with them, why not cash out some Tesla and build them out? If you don't, why do you own them in the first place? As small percentage of total portfolio weight probably don't make much of an impact anyways. I guess I'm keen to hear your thoughts. Thanks. Love your video." Well, thanks, Hesky. I have loved this comment and also liked it. And my answer to this question is that if you've been following me for a while, then you will know that I have been very transparent about my portfolio size and also some of the rules that I have personally when it comes to investing. Now, one of my personal rules when it comes to investing is that if I was to stock pick in a company that I really like, I generally start with 1% of my portfolio to learn more deeply about the company. So then I feel more comfortable adding more to it. Now, a year ago, my portfolio size was around 100,000. So 1% would have been 1,000-ish, give or take, right? But over time, my portfolio have grown to the size that 1% is approximately 2,000. So there are small positions because it's not because their quality is not as high as Tesla. It's just I need to feel comfortable and I need to learn more about it so then I feel comfortable enough to build out those positions. So a good example of that is Zillow. I started a 1% position in Zillow, and then I went to 2%, 3% because not only the price was right, and I also think that the macro factors are right, and I really liked the CEO and the product, at least the product roadmap. So for me, sometimes it could take weeks for me to build out a position. Sometimes it could take me months. It's all about comfort and managing my own risk. I've done things in the past where I would add a position that's way too big, like for example, 2 to 5% of my portfolio, and the market turns, my portfolio swings all over the shop, and then I make decisions that I'm not proud of. I've learned from that, and that's why I have 10 to 15 stocks that are smaller positions. It's actually because the quality is good enough for me to add them into my portfolio. Tesla is an outlier, and the other 10 to 15 stocks could also be an outlier. I don't know. This is me managing the probabilities of those picks being winners. So Lusa asked, "Are you still holding Talga? There's been no progression since the peak of last year." Well, I am still holding Talga because I just did a portfolio update, and there are progression when it comes to the company. Maybe the market is just not reacting to it like Novonix, right? So AJ Johnston asks, "In your opinion, do you think ASX will ever outperform the US market and have the potential to outgrow the US market with contemporary and future ASX companies?" Now, I'm going to answer the second question first, and then I'll try and answer the first question. With the second question, I don't believe that Australia can outgrow the US market, mostly because Well, US market have a lot more people, a lot bigger investors, and a bigger, deeper concentration of talent in the US because, well, all of the best companies are in the US. And a really good example is that Atlassian could have chose to go public in Australia, but they chose not to because in the US, there's a much bigger capital pool, right? And that is always going to be the case. I just don't think Australia can outgrow the US market. And not to mention that we only have around 25 million people compared to like 400 million in US. So big difference when it comes to population. I just don't think that will happen. But there is an opportunity ASX might outperform the US market in the future for maybe in the short term, because ASX do have some really good inflation hedge companies and US market is looking a little bit frothy at the moment. So there's an opportunity that yes, ASX might outperform the US market in the short term, but over the long term, I'm very bullish on technology companies, and most of the technology companies, at least the good ones, are mostly over in the US. So that's my thoughts on that. I'm not going to answer the Codan question because I have no idea. And how are you finding stock price or stock picks at the moment? Everything seems so expensive. Thanks, Luke, for the question. So generally how I find companies I'm interested in is either via podcasts, Twitter, and also just general reading. I read a lot and I use podcasts as inspiration, especially podcasts with CEOs, as inspiration on whether the company or the industry is worth taking a look at. A really good example of that is Zillow. Zillow CEO did some interviews on Invest Like the Best podcast, and there's quite a bit of content around him and the way that he's thinking about real estate and some of his past endeavors is super interesting. And that's how I got interested in Zillow in the first place. Another question from AJ is that, love my videos. What are your views on cryptocurrencies? In your opinion, do you believe in a long-term viable investment? Lastly, are you considering a larger allocation to crypto if you do hold any? I do hold Bitcoin, Ethereum, and also Chainlink. So in terms of believing whether that is a long-term viable investment, that's not really up to me. Everyone have their own opinion on that. But from my own circumstances, with my own risk tolerance and my own circumstances, I believe that cryptocurrencies have a place in my portfolio. So you have to make that decision for yourself. And the best thing to do is actually go read up more in terms of what is crypto actually doing for our society. And beyond the stonks and to the moon part of crypto, there's some very, very interesting developments and implications to our society. So for me, I am biased. I do believe that there is a long-term future for crypto, but for everyone else, you have to make your own decisions. If you survived all the way to the end, thank you. You are the real MVP. And if you did learn something new, it would mean the world to me if you could gently smash a like button somewhere around there, subscribe to my channel so that when I release future content, you'll be the first one to know. As always, Otto will always do the honors, and I'm gonna see you very, very soon.